If we look at prior cycles, we're kind of nowhere in the current cycle. We're nowhere. We've still got the exciting part where prices go vertical lying ahead. It's the light blue line here that's a little bit hidden. But really what we're doing is we're more closely following, let's say, the 2015-18 cycle, which I think is how it plays out this time, as opposed to the stunted cycle of 2020. But that remains to be seen.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. The clock is ticking. Raoul Pal reveals how AI will transform the global economy and why crypto might be your best chance of survival. Bitcoin, Ethereum, Solana, Tether, Solana, Dogecoin, which you invest in.
Why this matters is crypto in the end is the best performing asset class in all recorded history. It dwarfs anything else. So Bitcoin does about 142% annualized return. This is actually a table from Exponential Age Asset Management, my asset management firm that invests in crypto hedge funds. So we invest on behalf of high net worth individuals, pension plans, institutions, etc. And Bitcoin, Ethereum, Solana, the returns are an order of magnitude different to the next best performing asset, technology stocks, the Nasdaq. After that, you get to the S&P 500 at 13%, which barely beats that 11% hurdle rate, and nothing else beats it. The long-term returns of small caps, large caps, REITs, treasuries, nothing. They all are destroying your future wealth. So really, this is the powerful thing, the crypto supermassive black hole that outperforms everything. The Nasdaq actually is down 97.5% versus Bitcoin since 2012. 99.97% versus Bitcoin. So that's how powerful an asset crypto is. This supermassive black hole sucks in everything around it. And it happens because this is all about a technology that is growing. So this is a chart of the number of users of crypto by using wallet addresses versus internet users from 1992, when the internet was at 5 million and we started wallets from 5 million. Now, internet users is IP addresses. We've all got many IP addresses. Crypto wallets, well, they're wallets. They're not necessarily daily active users, and we've all got several wallets. So it's comparing a similar like for like. But currently, crypto has been growing at twice the speed of the internet. Now, on this chart, we assume the internet actually slowed down in year 8, 9, and 10. So we've assumed the same rate of growth as the internet, not a doubling of growth. If it was a doubling of growth, it's probably growing at 80% a year, which I think is more likely. But we slowed it down, and we get to 1.1 billion wallets, or users, in inverted commas, by the end of 2025. 1.1 billion. Okay, that's huge. But it's not as huge as if we extrapolate out to 2030, that fabled date where I think we've got 6 years to unfuck our future and invest before things change. At that point, crypto starts to become quite saturated in terms of its growth, because suddenly you're at 4 billion users and we can only double in growth to 8 billion users. Yes, on-chain activity will grow and that will drive more metrics and still drive prices, but generally the bulk of the returns happens between now and 2030, which is why I'm so anxious for everybody to make sure that they unfuck their futures doing this. It's a huge thing.
The latest record came in at $77,270 on Bitstamp, but was short-lived. Liquidity was shifting around exchange order books, leading observers suspicious. Spoof City again today, popular trader Skew responded in a post on X. Asks walking price down and bids causing price to bounce. Stu referred to the practice of order book spoofing, large bands of liquidity placed at a given level, only to be thinned out or removed completely after price reacts. Such behavior is common in crypto, but banned on legacy markets. Elsewhere, trading resource material indicators pinpointed a moment when one or more whale entities attempted to break through BTC price resistance, with major buying on largest global exchange Binance. I know it is weird to say after a week like this, but BTC is acting weird and underperforming, popular commentator Whale Panda told ex-followers, continuing the skeptical mood. When it broke ATH in the past, the moves are always aggressive upwards. Now it barely moves up. The higher the market cap, the more is needed, but inflows are massive, so who is unloading? Considering what might come next, meanwhile, popular trader Crack Nouveau maintained that a long squeeze could come before the weekly close. This would involve a sharp downward BTC price move, liquidating late long BTC entries on the back of the latest all-time highs. $77,000 hit, liquidations hit, he summarized alongside order book data covering Binance. Now yes, potential long squeeze in the making to shake out some longs. As ever, the long-term view was firmly skewed to favor the bullish narrative. In his latest X update, longtime commentator Pentashi saw the spot Bitcoin exchange-traded funds, ETF, driving demand going forward. I find it unlikely. We see those prices again after trading so long in this range. We see more ETF demand, he wrote, referring to the 8-month consolidation period that followed Bitcoin's old all-time high in March. We are seeing that in the U.S. some states are interested in holding it, and that retirement funds will begin to allocate. Global adoption will only ensure EAs from here. It's on an unstoppable path. Any big pullbacks are a gift. The spot ETF took in $293 million on November 8, per data from UK-based investment firm Farsight Investors. More than $1 billion less than the record inflows from the day prior.
And that's what's driving this beautiful log trend Bitcoin. Over time, number go up because people use blockchain technology because the world is more digital than today. And we've barely started the rise. We usually get to 2 standard deviations overboard. Will we get that far or not? I don't know. If it's 2 standard deviations, we're talking $500,000. That sounds a bit too racy to me. Maybe it gets to 1 standard deviation because each cycle is a little more muted than the past. Either way, expect prices to rise from 150 to 450,000 over the course of this cycle, depending how it pans out. Again, no guarantees here, but just to give you an order of magnitude, and filming this today, we're at 75,000. Okay, got it. And then finally, the banana zone, just so you can visualize what this means to you and your returns and how the banana zone, how you unfuck yourself with the banana, as those NFTs say that Real Vision's produced, is this. Things go vertical. This is the time not to lose your minds. This is the time not to FOMO in all the stupid shit your friends are making money in. This is the time to just do nothing. You should have already made your allocation. Maybe a bit of Bitcoin, a bit of Solana, a bit of ETH. Maybe you've gone out a bit the risk curve like I have, and Sui, which is one of the newer chains that's gaining massive adoption. Or maybe you're playing around a bit in memes. But remember to not fuck this up. My don't fuck this up thesis is don't use leverage. Don't FOMO into stuff. Have 90% of your assets in the core top 3 coins. And then with the 10%, you can speculate more, whether you want to have a meme or whether you want to look at some smaller projects. So that's how I like to think about it. That way, you generally won't fuck it up. It's by over-trading, try to trade breakouts, using leverage. Don't use leverage, please. Because what happens is you get it wrong and you lose your coins. We have one job here. One job in a secular megatrend like this is not to lose control of your coins. That means don't fuck around too much in DeFi. Don't give your coins to anybody. Just do nothing. Use that 10% if you want to feed your inner DJ, or you want to learn new things and how things work, but don't do it with your full stack.
News outlets continue to report election results for United States House of Representatives races in California and Nevada, with more candidates supported by cryptocurrency political action committees, PACs, winning the races. As of November 8, the Associated Press reported that Republican Young Kim won her race in California's 40th Congressional District, and Democrats Susie Lee and Stephen Horsford in Nevada's 3rd and 4th Congressional Districts, respectively. The Fairshake PAC spent more than $3.7 million on Horsford's and Kim's races through media buys, while Gemini co-founders Cameron and Tyler Winklevoss and other crypto executives contributed the maximum allowable amount to all 3 candidates' campaigns. In addition to the House races, which could determine whether Democrats or Republicans have majority control in the chamber in 2025, Republican David McCormick defeated Democrat Bob Casey Jr. in a crucial race for a U.S. Senate seat in Pennsylvania. The Bitcoin Voter PAC, a committee backed by crypto mining executives, spent roughly $35,000 to support McCormick in the general election. Stand with Crypto, the political initiative supported by cryptocurrency exchange Coinbase, reported that more than 200 candidates running for the House, Senate, and White House, who had expressed support for digital assets and blockchain, won in the 2024 elections. Industry advocates speculated that the new Congress and U.S. President could help push through pro-crypto legislation like the Financial Innovation and Technology for the 21st Century Act, expected for a vote in the Senate after passing the House in 2024. One of the most significant consequences of most U.S. lawmakers prioritizing crypto and blockchain could be a change in leadership at the Securities and Exchange Commission under Chair Gary Gensler. Donald Trump promised to fire Gensler on day one if he won re-election. Some candidates running for office in 2024 directly criticized Gensler's regulation by enforcement approach to crypto companies. Under the chair, the SEC filed several lawsuits against firms in the digital asset industry, including Coinbase, Ripple Labs, and Binance. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.